What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and something that's extremely important for the markets. I'm going to be talking about what on earth is a recession, how may a recession affect our economy, how may a recession affect Tesla's share price for the next couple of months, and also why the month of July, which is next month, is going to be a massive, massive month for the markets, and it may actually kind of steer the course we're in for the next like 6 months or so. Now, before I break anything down about this, before I talk about whether or not we're in a recession, how this could affect Tesla, I do have to mention a couple of things real quick. Firstly, I'm not a financial planner. Don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo with the link down below and deposit $100, you are going to get 10 free stocks, each worth up to $3,500. And the best part, in my opinion, is out of these 10 free stocks you're going to get, 5 of them are actually going to come from this wheel down here. So that means that you could get 5 free Apple shares, 5 free Tesla shares, 5 free Google shares, or kind of them kind of like mixed up. That's a very, very good offer. It ends in just 7 days. So please check it out before they run out. With that out of the way, let's get on with the video. So anyways, looking at Tesla, we've noticed that this thing has been on a bit of a downward trend, maybe close to the time the year started. So Tesla's all-time high was around $1,243. And since then, we're now trading in the 600s at the time I'm recording this. So it's been dropping and dropping and dropping. And what on earth is really going on? And we could really tell that the Fed raising the federal funds rates to kind of deal with inflation is playing a bit of a role. There's also fear and other factors. But another big factor, another thing that's going to kind of dictate the course of the market would be whether or not we're in a recession. Okay, I'm going to show you why on earth this is so important. So the month of July, particularly, is going to be a very important month for many tech stocks because on July 20th, for instance, Tesla has their Q2 earnings report for the fiscal year. And in addition to that, we also are going to get the GDP report. So, when it comes to what is a recession, okay, by definition, a recession is a macroeconomic term that refers to a significant decline in general economic activity in a designed region. So, that would be the USA in particular. Now, we typically recognize it with 2 negative consecutive quarters of economic decline reflected by GDP in conjunction with many monthly indicators, such as a rise in unemployment. So, has unemployment been kind of rising? As of right now, we don't have I don't have the data just yet, but I do kind of anticipate we are going to see a bit of an increase, maybe just slightly for the next like year to year and a half. And the reason for that is because of the fact that we're seeing the federal funds rate go up. We're seeing inflation that should start to drive down. And when we reach this position where the Fed has to kind of rug pull the markets to bring down inflation, it could have a negative effect on unemployment. And that is often associated with a recession. Now, are we in a recession? The answer is we may be, but I can't promise it yet because typically, or like the most common way of looking at the indication is, do we have two consecutive negative GDP quarters? And here's the interesting thing. The first quarter, this report came out near the end of May. The first quarter GDP declined 1.5%, worse than they expected, and jobless claims did actually edge lower. So this is important because the first quarter of this year was negative. Okay, the next quarter, Q2, that's coming up. The data is going to come out, I think, by mid to late July. So once the data comes out for our GDP report for Q2, if it's negative, we're going to be in a recession confirmed. If it's positive, I mean, we could still be in one, but that would actually be a very good sign because the damage won't be as bad as maybe many people would think. Now, here's the thing about this data. The first quarter, many people said it was negative because of what happened with the whole uh, Omicron variant of the virus, a lot of shutdowns and things like that. So perhaps that played a big role. Hopefully, the next quarter isn't as bad. And right now, many big companies, many big analysts out there and economists are actually forecasting, such as the Conference Board of Economic Forecast. What they're essentially looking at is they think GDP for Q2 is actually going to rise 2.1%. So if that's the case, that would be a pretty good sign for the markets. It wouldn't be as bad. And another bank known as Scotia Bank, I apologize if I said that wrong. They initially thought that our GDP for Q2 would have actually grown by about 4.7%, but now they're thinking it's going to be 3.86%. Now, the thing to remember is this was before the surprise 75 basis point rate hike that we got by Jerome Powell. Okay, so I mean, many people were surprised he was that hawkish. Many people were surprised, and who knows, maybe the data is going to suggest something differently because we still have 2 more weeks left. And with that said, it could cause our GDP to actually turn negative. So, what are the possibilities? Is it going to be negative? Is it going to be positive? And you can see how our GDP would look like over the last couple of quarters, right? It was positive, it was growing. We saw a big decrease in Q3 of 2021, a nice increase by Q4, obviously with Christmas and other things like that playing a role. But then the latest one that came out was Q1. It was negative. So hopefully we don't get another negative report for Q2. If we do get it, just note that recessions are just disruptions to natural business cycles. And when they happen, there could be a lot of hardships. I understand that. And I really show sympathy and empathy for everyone that's affected. But at the same time, there are important things to look at. So, how is this going to affect the SPY? I actually found this chart in another video. I want to give all credit to Bloomberg because this is where this data source came from. What I did is I took the image, I made it bigger because this image was way too small, and I just wanted to focus on this image specifically. So this chart looks kind of crazy. Let me make it simple. The blue line you're seeing is the SPY right now. Obviously, the SPY pushed up really hard, then it started to drop. The market, right? The stock market, it runs in cycles. Okay. And you'll notice like a lot of people, they do this thing where they look at the chart of the SPY now compared to 2008. They're going to make these connections and do things like that. So, yeah, I mean, there's truth behind it because the market tends to run in cycles. Now, here are kind of like statistics or like data points that could really help us understand what may end up playing out. So, see how there's this gray line right here. See this gray line right here. This represents the median price action with no recession, right? This is what the SPY may end up doing if there isn't a recession. And this is what historically happened in the past when we thought we were in one and we ended up not being in one. So you could see what happened to the SPY was it pushed up just like how we did, and we entered this cycle where we dropped pretty hard. And then we found out we weren't in a recession, so we kind of actually held up for some time. Then we pushed down again, but our low was not that much lower from where we originally were before we saw a nice recovery. When does the recovery come? Around 400 days is how long it would last. And you could argue that the cycle started back around, I don't know, you could argue it started around January or something like that. So you could argue that we may start recovering around 2023, maybe by like Q1, perhaps something like that. So I don't want to promise these dates. Sometimes it could happen sooner, sometimes later, but I just want to put it out there. We could see a little bit more choppy price action for many months to come. Now, the black line, see this black line right here? If we are in a recession, and this is the median price action of the SPY in a bear market that was used from data that dates back to 1929. And you can see how similar it is to the way we kind of moved right now, as the market does like to move in cycles. Look what happened. The black line, okay? We push up similar to how the SPY did. We drop down. Okay, we find that first major bottom, we get a temporary relief bounce. Then we drop down again, a second bottom. And this is supposed to be pointed out as a bull trap, right? The bull trap comes, we actually push up, people get excited, then we actually start to slowly bleed. We have one last major drop, right? This could last many, many months before we get the recovery and we start pushing right back up to all-time highs. So my estimate would be if we are in a recession, I think sometime in as we approach 2023, sometime near the end of this year, we may find our bottom around there. And I'm hoping that by the start of 2023, hopefully by the time we get closer to Q2, we see a very, very nice recovery after that. We start pushing up. If we're not in a recession, if all this time people were panicking, or how should I say, if the second quarter GDP comes out, right? Because I talked about how the first quarter was negative. The second quarter comes out for this year and it's actually positive. We actually showed improvement. The market might actually rally. It won't be as bad as some people would have anticipated. So that doesn't prove that we're like not in a recession, because we did see this decline in our economic activity. We have all these issues, but it basically suggests that the economic effects would not be as bad. So, like I said before, if things aren't as bad, the bottom of the SPY won't be as bad, right? We would already be close to the bottom if the next the next GDP quarter report that comes out isn't negative. The bottom wouldn't be that much lower from where it is right now. If it is negative again, if we are truly in a recession and the media goes crazy, we're going to drop even more. Right? That's the easiest way for me to explain it. For Tesla, what does this mean for Tesla? Because I was talking about the SPY. Let me do something different. Let me use daily candles and maybe kind of try to zoom out a little bit like this. So for Tesla, okay, let me actually use 2 hour candles. So for Tesla, okay, we're seeing this thing just drop and drop and drop in a crazy, crazy way. If we're in a recession, okay, and we find out in July and the market goes crazy, there's going to be a lot of, how should I say, an emotional response. If the GDP report comes out around mid to late July and it says we're in a recession, it's negative, right? That would mean we have 2 consecutive negative quarter GDPs. Tesla's going to tank. That's as simple as I could put it. 620 would definitely not be the bottom. We are probably going to drop to the 500s, in my opinion, if that happens. And also, tech earnings are going to play a role too. We want to see how earnings really perform for the month of July. If, hypothetically, the second quarter comes out, let me bring this chart up again. See how the Q1 of this year was negative? When Q2 comes out, if it's not negative, if it's actually positive, and we do quite well, what I would expect is in July, the market might actually rally a bit, and then we might kind of continue to decline a little bit. And our true bottom, okay, our true bottom wouldn't be extremely far from 620. Probably it would be around 600 flats, maybe 590, 580, maybe around there, just hypothetically. But we're most likely not going to drop all the way down to like 500 flats or like 520. I mean, I would find that quite unlikely, because it all really comes down to, are we in a recession? How bad is our economy performing? Is inflation starting to drop? Those types of factors. Now, it's also going to depend on the Fed and other factors like that. So I just wanted to actually put this data out there and talk about why on earth July is going to be huge. So my intention is to warn you right now that in July we're going to find out, have we been in a recession? Or have we not been? It's going to be a massive, massive month. So I'm preparing you right now. I'm letting you know all of this right now before the month of July even starts. So you're prepared, you're ready, and I will make more videos about this and go into more details. But this is why this is an important warning, because it is possible that Tesla may be near its bottom right now. If the next quarter is positive, if it's negative, if tech earnings are not necessarily ideal, if they don't do too well, there could be more downside. And July is probably going to be the month that really dictates the forecast for the remainder of the year. So be prepared, okay? Strategize, do whatever you have to do. Know one thing, and that is, as I've said many times, downside isn't a curse. It could be looked at as a blessing. The opportunity to get these Tesla shares for cheap, the opportunity to buy even more, to buy these dips, the opportunity to learn how to trade in a very difficult market will help you to become an even better trader for the long term. Look at this as an opportunity. I'm okay with anything, whatever happens, I'm fine with it. What happens, happens. We have to stay strong and move forward. And this is just my warning to you. So be prepared, stay strong, and never ever quit on your dreams. Thank you for listening. Enjoy the rest of your weekend, and I will see you guys in the next one. Tesla to the moon, and peace out.